Welcome. Let's take a look now at some of the events to watch out for the week starting Monday, the 12th of December. And I should say that there's no corporate news headlines to watch out for. A couple of trading statements may happen around Boohoo, possibly, but we'll have to see how that week develops. But let's take a look at the agenda now as we look ahead to what's happening on the economic side of the calendar. And we begin on Monday with the US monthly GDP data print and also trade numbers out in the States, along with industrial production. Look at what's happening on Tuesday, as overnight we get the Westpac consumer confidence number out in Australia and the National Australia Bank business confidence update as well. The Australian Central Bank recently raising interest rates by 25 basis points and says that there is still potential upside to go for interest rates depending on how things work out. So this data could go some way towards that. We got the UK unemployment rate at 7 o'clock in the morning on Tuesday, and then the German ZEW economic sentiment. These data points are actually quite interesting read for these economies. And then later on in the day, we got inflation data out, the consumer price inflation in the US and the API crude oil inventories. Wednesday starts the first of three major pinpoints for next week around interest rates, with the Fed at 7 o'clock in the evening, along with the economic projections as well from the FOMC. But before then, we get UK consumer price inflation and the Japanese Tankan Large Manufacturers Index. Thursday, we have two interest rate decisions, the Bank of England and also the Eurozone Central Bank. Again, adding up to what is an interesting week overall for monetary policy. But before then, we get Japanese trade numbers and industrial production in China. And then later on in the day, US retail sales data as well. And rounding off the week on the economic calendar, overnight we get the GfK consumer confidence number coming through and retail sales. Meanwhile, Eurozone, UK S&P Global Manufacturing and Services PMI data. And we round off the week, as we ever do, with Baker Hughes and the oil rig count. Josh joins us now with his thoughts on this. As I said, no corporate numbers to watch out for next week, but nonetheless, it is quite a busy week. And I think for us traders, there's going to be opportunities here to trade the markets. So what are you looking at particularly?
Yeah, I think this is a massive week, quite frankly. And the backbone of this is the fact that, of course, we're seeing central banks coming out with not just commentary, but coming out with their latest monetary policy decision. And that should give us an idea of where we're going to see them essentially end this period of tightening. But we've also got inflation data coming out of the UK, coming out of the US. Now, we've grown accustomed to the idea that US inflation has topped out and that it's moving swiftly lower. We're not necessarily seeing the same kind of thing in the UK. So do we see, much like we've seen with the Eurozone, do we see a nice move towards the downside for the UK inflation rate number, which we're expecting to see a slight tick lower, nothing particularly major. If we did see a decent move lower, then, everything's hunky-dory and everyone starts thinking, great, we're mimicking what's happening over in the US and Canada. But there's a good chance we don't necessarily see that. We're expecting to see a very slight tick lower in terms of UK inflation. So essentially, it remains stubbornly high. And we're also expecting to see that decline in terms of the US inflation figure start to slow, with the idea that we're all of a sudden largely flatlining in terms of US inflation. This whole story of inflation's topped out and now it's heading lower. And, in an ideal world, that's just a direct sort of line down towards the 2% target. What if we don't bottom out and head towards 2%? What if we remain at 7% or remain at 6% or something over and above, and makes people think that it's going to have to take a period of sort of lengthened tightening and tight monetary policy from the Federal Reserve? So that's what we need to look out for. Does US inflation continue to move lower? And you have to bear in mind that markets are already factoring in the idea that it will continue to move lower. So if it moves further lower, yes, we'll probably see some upside in terms of equity markets, but not as much. We're coming off the back of 2.5 months of it. Whereas if we were to see flatlining inflation over in the US or a move higher, then suddenly that whole story starts to unwind and we're likely to see markets suffer as a result. That's why I want to bring up first and foremost the VIX that we've got here, the volatility index. This is based on the S&P 500. From this wider context, you can see this wider trend here. And crucially, we've come back towards this 20 area. That 22 zone has marked the lows back in 2022 on a couple of occasions, then back in August 2022. So over the course of this year, we've seen 1, 2, 3 bottoms around about this level. For each time that we see this market bottom, that also generally marks a top for equity markets. We're back at that level now, and we look like, after 8 consecutive weeks of downside for the VIX, we look like we could be creating that first strong bullish candle and a potential bullish engulfing formation. So are we see a turning point for the VIX, and is that going to lead towards a decline in terms of equities? Well, thus far we've rallied into that first swing high at 24.56. We're turning lower from that, and bear in mind, when markets do turn, they often have a bit of chop at the top or at the bottom, as you see the battle between the bulls and the bears. So certainly I'll gain greater confidence that we've bottomed out in the VIX with a move back through that 24.56. And in the near term, you can see, as we see the VIX moving lower, we're seeing equity markets taking a bit of reprieve and starting to move higher once again. But there is a risk here that we see this bottom out once again around that 20 zone. And those inflation numbers are going to be really key. And the outlook from the central banks, which we're expecting a 50 basis point hike from the likes of the ECB, the Bank of England and the Federal Reserve. What's the outlook going forward? How much further have they got to run? Another key market to be looking out for, with the idea that the VIX has potentially bottomed out, is the S&P 500. As we see on the weekly time frame, we're back into this trendline resistance that has capped all of those peaks. So each time we see a peak here, it was a time when we saw the S&P, the VIX at that 20 to 25 zone of support and start to bottom out. Are we seeing it once again? Once again, we might have a bullish engulfing for the VIX, but a bearish engulfing here for the S&P 500. So on the daily time frame, is it telling us the same story? Well, yes, we've now broken through support here at 39.36. So near term, I could see some gains as we cap out last week and start next week. But bear in mind, I think there's a good chance this is going to falter. And if we do see the inflation picture over in the US start to stutter, or we don't necessarily see UK inflation turning lower, then there's a good chance that we see those fears start to come back into play and we see this market top out. In terms of the sort of FX perspective, we'll look at euro dollar. We have been moving largely towards the upside. And so you would expect, if markets come off in a heavy manner, then you'd expect to see the likes of euro dollar do the same as we see the US dollar come back into strength. But bear in mind, as we see that disparity in terms of inflation, with the US and European inflation rates gaining greater distance between the two, arguably it probably makes more sense that if you were looking to short one of these markets against the US dollar as equity markets roll over, if we continue to see elevated inflation rates in Europe, you're probably better off targeting areas like, say, the Australian dollar or something like that, rather than targeting the likes of the euro and the pound, which are continuing to deal with double-digit inflation.
Okay, Josh, thanks so much indeed. Quite a comprehensive roundup of some of the angles in which to attack the monetary policy decisions out next week, and also that inflation data that we're expecting. That's our look ahead to the week starting Monday, the 12th of December. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.